Should I put my face on or no?
Oh, we're all right. We're live. I think usually we're a little late. Today we're a little early, which is good. We're usually a few minutes behind. Today we're kind of 2 minutes early. Oh, there you are. Okay. We're here with the, Satis Group?
Yep,
Satis.
Satis. Okay, Satis Group. And what are your names?
I'm Sherwin.
And my name is Michael.
Sherwin and Michael. Are there others part of the Satis Group, or is it just you guys? Or
Yeah, so we do have a team of about 8 people, and that goes basically we have 2 sides. The first side is kind of like the banking advisory side, and then our side is we kind of do the independent research.
okay. Yeah, I feel like the roles are reversed here. I'm in the shirt and tie, and you guys are supposed to be the finance guys. Meanwhile, you're wearing the Occupy and Monero t-shirt, and I'm wearing the shirt and tie. What happened?
Appropriate. Well, Michael. Oh yeah, sorry.
Go ahead.
No, I was gonna say. So Michael and I are pretty separate from the advisory side. It kind of started with the firm being ICO advisory, and then we split off. And so we're kind of we're entirely separate. The contributions from there don't come in here. We don't get input from them. We basically publish our own research, and that's kind of all we do. So yeah, and we got tired of wearing ties because we don't work on Wall Street anymore. So, so thank you.
And you probably get more respect in the community for not wearing ties, right? It's like kind of works the opposite way. Right?
Yeah.
So, but is the group associated with Bloomberg in any way? Because I noticed that's where it was kind of like the news broke was from Bloomberg, and is the group kind of under Bloomberg, like, or unrelated, or?
So yeah, there's a lot of misconceptions about that. So we just create the notes through Bloomberg's publishing platform and push it out through their terminal. Our research is more intended for an institutional audience. So it's not related to them. I mean, they've used our data in different bits and articles, same as Wall Street Journal, same as FT, whatever, but it's not related to them. We use their platform, but it's completely separate from them.
So are you guys seeing a lot of interest, obviously, in the mainstream financial institutions in terms of crypto and trying to evaluate crypto assets?
Yeah, pretty good interest. I think most of it is understanding the space, because in the world we live in right now, it's pretty granular. We're all a technical crowd that gets into the weeds. I think for the most part, a lot of them are just trying to get a good grasp of what this stuff is as a whole. So if you look at our reports, it kind of tries to encompass the entire thing, not just Bitcoin, not just Ethereum, but kind of understand the whole space, trying to break it up the best way we can so that they can understand it. And obviously they're barred off right now because of a lot of the custody issues, but they're preparing for that kind of thing. So it's good to have some holistic research, which is what we're aiming for. So yeah, there's definitely been a lot of interest from all types of funds. We've spoken with really, really old mutual fund managers, like stuff your parents probably use, but as well as hedge funds, as well as crypto specific funds, which you're familiar with. So
I noticed you have the Monero shirt on. Are you kind of a Monero enthusiast, research aside? Is that something you align with?
Yeah, Mike and I have actually been fans of Monero since pretty early on, mostly because the community, and it's pretty understated in general. The community is much more technical, again, more humble and understated. And honestly, based on what we said in the report, that's how we have felt for quite a while. We'll go through the numbers so people can see that we didn't go into it with a pretty biased view. You can show the math and everything, but yeah, we've both been fans of the community and the project as well. So, yeah.
And I think one of the things that kind of attracts me personally to Monero and a lot of people is it really goes along with the privacy. It goes along with, I think, why a lot of us became interested in Bitcoin in the beginning, kind of having that asset that was like a true digital, private, untraceable money. And I think a lot of people that started with Bitcoin, well, they still want that, and they've realized that Bitcoin is it's more traceable than they might have thought in the very beginning, ultimately.
So was that your path that both of you've kind of taken? Like you started off in the Bitcoin world, and then as you realize the blockchain was as everybody started to realize how transparent it really was, or whether or not that was obvious to you from the get go, and then you kind of slowly transitioned into things like Monero and seeing the need for privacy and fungibility, or did you guys start in Monero? What was the background there?
So Mike and I have been around for quite a while, maybe 6-7 years ago. We were mining in the dorm rooms, and Monero now, I think, Mike, I don't want to speak for you as well, but reminds us of what Bitcoin reminded us of back then. So when you learn about Bitcoin's not entirely private. I don't want to say Monero is or guarantee anything, but it's much more, and compared to the other solutions out there right now, is definitely much more compelling. But it reminds me of what Bitcoin made me feel back then. So it goes along exactly what Michael said. We sat there and watched all these different crises around the world go on. Brexit, all these Cyprus, all these things go on, and it just made it much more appealing. And then you can see what was kind of going on there, and we can go through our backgrounds and stuff as well.
Yeah. So you want to do that?
Sure, Mike. You want to go?
Yeah, I'll start. So I ultimately I probably got started interested in Bitcoin specifically. I'd say soon after high school, senior year of high school, which would have been 2010, 2011, maybe that type of time frame. Like I kind of mentioned, really attracted to just the idea of a digital money that was kind of not under any central government control, kind of just like the freedom that could provide, almost philosophically. And I just thought that was really cool. And so that's really what ultimately got me interested in it. And then, like Sherwin mentioned, in college, we mined actually Bitcoin in our dorm room with just GPU miners, but for me, GPU miners, because we had free electricity. And it was just like an opportunity you can't pass up, just to keep the miners running 24/7. And from there, I did like a little bit of kind of like independent tech research, and then eventually I joined Argon Group. Argon, if you've heard of them, they did the first security token offering blockchain capital, and then moved on from Argon, and I've been with Satis for about seven months or so now.
Cool.
And then back in the dorms, Michael actually introduced me to it. That was around the time we were poking around at Silk Road and stuff like that. We thought it was interesting. My background was in finance, so I was pursuing a career in equity research, so stock research, like an analyst you'd think of. And then I worked on both quant research in school, so math-based crypto research, really just on Bitcoin network stats, and then just an overview of it for the finance department, because back then it was pretty foreign. And then I worked on Wall Street on one of the first valuation reports, which is what this is kind of based on, at Wedbush Securities. And then I continued working on Wall Street in research. And then finally, there was the opportunity to go full-time into crypto. And then Michael and I joined together and have worked on research. So basically sell-side research, like what you think of on Wall Street, but for crypto, because I think that's needed. And back then it was not like you would never mention this stuff in an interview. That was just automatic shutdown an interview. It's just known as weird, but now there's somewhat of a place for it. So that's what has led me here. We've been fans for a long time. When you learn about it, we poked around in it for a bit, but when you first learn about it, it's pretty, down the rabbit hole, which I don't like using, but it's true. So
definitely. What do you guys? I mean, I imagine when you're starting to value this stuff, it kind of starts with what is the value proposition of blockchain technology? Like what can you do with blockchain that you weren't able to do before blockchain existed? It's kind of, I mean, that's at least how I start to look at it when I start to value this. Do you guys take that approach? And I guess my question is, what do you see being the value proposition of blockchain in general?
Sure. Actually, can I share the note? Is that okay right now?
Sure.
So basically what we did with this one is, we narrowed it down to kind of what end markets do we think will this stuff leak into a bit and be used in a bit. ICO funding, crypto trading, which is becoming very big by our most recent report, gaming, gambling, remittance, unbanked population, just keeping their money there, digital commerce, video games. So all those different places, mobile point of sale, offshore deposits, IT, storage, compute, the whole IT situation, the whole stack. So quite a bit of things, and I can go into it further if you'd like. So
yeah, I guess what I was getting at, I mean, because like all these things exist already, right? Like I could already send remittances today, obviously using other technologies. I could, there's PayPal and a million other ways I could basically send money instantly around the world to anyone, basically for free. So that's obviously not what the value prop of Bitcoin or Monero is, right? So I mean, do you guys see it as being censorship resistant value transfer? Is that, I don't know. I'm not trying to put words in your mouth. I'm just trying to get down to the root of what this stuff is, if you boil it down, and what this technology allows us to do that we weren't able to do before.
Yeah, oh, sorry. I went into too much detail. Yeah, absolutely. So yeah, censorship resistance, when it comes to applications, having, minimal downtime, anywhere where there's some sort of, intermediary or third party, which is, I mean, from our early reports, if you look at GDP and the percentage of GDP that comes from the result of some sort of intermediary service, it's really astonishing. Most of the financial services industry, so it has the ability to take over some little bit from those because of just the nature of it, how it can run without that, or to lesser degrees. And Mike, if you want to add, but that's.
Yeah, I agree with that. So I think there's definitely as far as networks and gaining little slices of that. I think ultimately it's the biggest is the censorship resistance as far as having an asset or a currency that a nation state cannot really clamp down on. There's traditional networks. You could shut down PayPal. You could shut down MoneyGram. You could shut down these other remittance services, and just with something that's resistant to those types of attacks. And when you add in like the privacy, as well, I think that's really where I see a lot of the value coming from.
So you guys essentially, I mean, we could run through the whole report, but you guys, it sounds like you see kind of store of value as being the biggest chunk, right? Of where the actual use case is for this stuff. Is that accurate?
So with this report, we kind of went on a 10-year frame. It's interesting because a lot of people assume a lot of value in these these networks and their different assets on them. But when you look at what they're being used for right now, the immediate compelling use for them, yeah, absolutely, it's going to be that store of value, remittance. There's no applications there yet that they're being used for in a meaningful way. So we tried to project that, but at the moment, absolutely, that's why they're all being used for what they're being used for. That's why crypto trading's taken off. It's a new asset that you can transfer in a different way you couldn't before. No one's actually using this stuff for computer storage yet. But at the moment, yes, I'd agree. So you can already use it for those is what I mean. Like right now, if you were to go and store some value there, you can already do that. With a lot of these networks, maybe they're not big enough to be used for whatever end user they want to use it for. There's no actual meaningful application of the token that you're buying to use it with. So yeah.
So running through these charts, then, if we look at the initial one you started looking at, which basically breaks down figure number 3, sure, the estimated penetration of crypto assets, and then for each addressable market. So, like for example, you have ICO funding on the top,
right?
So wouldn't that just be 100%? How else are ICOs being funded other than with crypto?
Yeah, sure. So right now, yeah, much of it we think is crypto, but down the line, fiat currencies are going to be, definitely you're already seeing them used on a lot of different platforms. So a lot of the big ones, Coinlist and things like that, they all support fiat currency. So we basically see it shrinking in terms of share, but the size will go up. But yeah, you can use fiat currencies, and we think that'll become bigger.
Okay, and things like trading are going to kind of, well, I guess that space will continue to grow. And then I guess like we were saying, where do you have, what would that be? Precious metals, or where are we seeing the store of value here?
So that's where you typically would have stored it with any other precious metal, gold, silver, something like that, leaking into this space from, what type of share of that value would be in this market. So, and I can walk you through the methodology all the way from the top, kind of how we actually broke it down by looking at the size of the market. Is that, or did you want to?
No, yeah, go for it.
Sure.
Go for it.
So the math behind it, and there's a lot of different ways that you can think of valuation with this type of stuff. A lot of people might look at this and think it's hypothetical, but I think the important part to remember is our audience is an institutional audience, and they need to have some sort of framework that they can look at this stuff and have some estimate of value through some sort of actual framework, not a regression or a chart, or or just looking at a price chart. They want to have some sort of fundamental understanding. So basically, we used a methodology, which is MV equals PT. So basically, the supply times a velocity, which is a turnover of some unit. It's valuation of kind of looking at an economy. So MV equals the price per unit of the cryptocurrency times size of the economy. So the goal in a nutshell is basically estimating the size of some economy and backing into the amount of some asset you would need to facilitate that kind of economic activity. And so this report does that. So basically at the top, we forecast out the TAM, so the total addressable market, AKA what's the actual market size. So how big is IT spend? How big is ICO funding? How big is crypto trading? So you come up with something for 2018, we came up with an estimated $56 trillion is the addressable market that we think crypto could approach, like the whole market that it could possibly take share from. We forecast that out to come up with our future rates. We use typical industry estimates, Gartner, IDC, things like that. And then we come up with some sort of share that we think crypto will take of that, which is what you saw here. Then that basically comes down to some sort of capacity you have supported by these currencies. And then, so let me see, what is this? The crypto asset, yeah. So this is the penetration again. Then what we do is we divide by velocity. So what you're thinking of is how many times does this token or whatever need to actually be used and flip inside out per year. So if you're thinking of something like, if you're going to buy something from Starbucks rather than actually storage of value, that's going to have a lot higher of a velocity. So you'll need less of that token to facilitate that amount of economic activity. So the higher the velocity, the less of that thing you'll need, the lower the value. So basically, let me see what we came up with here. So yeah, so then you divide that out and you come up to some amount of this crypto that would be needed from that original 56 trillion. And the penetration that you think crypto will have, let's say 1% or something, that'll get you to a certain amount. So I think we put, I don't know what our blended percentage was, but long story short, we came down to about $170 billion worth of crypto to have that share of economic activity. You need that much crypto to actually facilitate that based on the frequency of use, each of the cases, things like this. Then we split it down each of the sectors. So we have currencies, platforms, privacy coins, and we have each of the niche ones, storage, compute, gaming. And then we basically assign them each shares of that. As you can see, with currencies, we assumed Bitcoin maintains lion's share, but kind of decreases. Platforms, ETH, same kind of story, but decreases at a faster rate. With the privacy coins, these certain amounts. And of the percentage of the crypto needed from within those different subsections that we mentioned here above, what percentage would go into each of those buckets of the sectors. So as you can see, offshore deposits are a huge amount of money that we think is pretty it's pretty ripe for, I guess, crypto penetration because of the use cases that crypto has, and certain networks have, which we've estimated here below, which we think which networks will get the lion's share of each of those. So yeah, sorry that was a lot, but I can go into that. But
no, that's a good overview. So I guess looking at the figure 7, then.
Sure.
So you have basically, obviously, Bitcoin being owning the lion's share of the currency space, and I guess declining a little bit over time.
Right.
And then, so who do you have kind of eating into their share there?
Honestly, we have just some variable as to leave the chance of some other coin coming in. So other is a large piece that we just put in there for the amount of uncertainty. Because basically we're assuming that with whatever's out there currently, it's, if anything, not compelling at all to completely take it over. So we're leaving that in there for some uncertainty, but mostly BTC, yeah.
Do you guys see Monero potentially eating into that space as well, or that one Monero you don't really see playing into the currency use case so much?
So we have Monero in there, and to be pretty conservative, we've left it at a pretty small share of that. Again, mostly to be conservative, at a similar share as some of the others, Litecoin, Dash, and some of these. We think it can definitely be used for those types of use cases, but we think someone at a mobile point of sale, going to whatever, buy Starbucks, will be much less likely to use this than they would Bitcoin or one of these other ones. Again, we don't find any other ones as compelling as Bitcoin because the network effect it has, the liquidity it has, the amount of people accepting it. So Monero, we think, actually wouldn't be compelling in a lot of those high velocity use cases that you think of with currencies. But in the store value, we'll get into that with the privacy coins. But in there, yeah, we left it pretty low to be conservative.
Mm-hmm. Yeah, because I mean, obviously, a lot of people in Monero land, the goal is for Monero to be used as a currency,
Right.
There's certainly it certainly has elements, features that are amendable to that. The dynamic block size and things like that, and then even things like the tail emission that will keep the network secured over time, and then additionally just the fungibility itself. I mean, because ultimately, shouldn't a currency be fungible? Is that something you guys considered? Like, I know, because you look, there's the whole privacy thing, obviously, in terms of storage and how that plays into that use case as well. Right. Store value. I'm sorry, but for the use case of a currency, did you guys look at fungibility and whether or not that's something that may eat into Bitcoin's market share?
Yeah, and I mean, I do agree with what you're saying, but I don't think it's big enough to justify a giant move in it because of the lead that you see with things like Bitcoin that already have this ecosystem set up. It's a much tougher battle for it. I think its prime use will be in other areas, honestly, versus those where there will be better networks which have much more liquidity. And I mean, yeah, fungibility, but liquidity will win that over every time. Whether there's acceptance, whether those people that accept it can get some sort of liquidity, how many places accept that, I think that overstates or would be much more important than that. So I'm not going to understate fungibility at all, because I do agree that's pretty important, but I don't think it would be enough for it to kick over something like Bitcoin, even if some of them could be traced down or whatever. And Mike, I don't know if you want to add, but
yeah, just I guess that, as far as use of the currency, I'd say there's some hesitancy, in some sectors just because of its, the privacy aspects and stuff like that. I think, there could be, resistance at a very, depending on the government, I think there's going to be more resistance on extreme, privacy coins, just for, for a matter of, tax collection and, tracking, dark money and, crime and stuff like that. So I think, it's possible, but I do think there's some resistance there.
And we've seen Monero have this much trouble being listed on different exchanges because of the nature of it. Of course, Zcash can get on there. If you want to talk about fungibility, Zcash is going to probably have problems with that. And I totally agree with what Mike's saying. You'll have trouble getting people to accept it and things like that.
And then, so moving on to, I guess, platforms, because I see that that's, obviously
Right.
a huge use case that we saw with ICOs and things like that. So who do you, if you want to just go over that real quick, who's the kind of the market, who's taking the market share there?
Sure. So with platforms, we have ETH. Obviously, it's the largest currently. We have that losing share, mostly because within the platform space, we think the dynamic is not it's not even close to what is within the currencies, which revolve mostly around the network effect. With platforms, no matter what the network effect, as we've seen with Ethereum, that can be lost pretty easily. The cost to switch platforms is actually, it's not that much. We haven't seen any real dApps built on anything. So we think when that comes about, that might give a stickier situation on whatever platform they're built on. But right now, that's not set yet. If a lot of people want to migrate off Ethereum right now, it's really not that hard for them to. And we factored in a pretty big other category as well to reflect that. And within the platforms, we probably find EOS to be most compelling. I'll let Mike go on that, but that's probably the biggest competitive share you see coming in. But again, we left kind of other because it's just much more competitive in the space.
Yeah, and I think it's really early to decide, if any platform is gonna, really take the market share from Ethereum. Obviously they have the community, which is huge. So, it's a bunch of trade-offs, and I just think it's not really clear what the community and what the developers are going to completely favor. I think there's definitely good reasons to use a platform that has much higher scaling already, higher transaction rates, different fee structures and stuff like that. So I think there's some threat there, and it's going to take some time to see how it settles.
And when we say platforms, is it primarily, we're saying, being used for purposes of ICOs, or what are the uses within platforms that you guys are kind of dreaming up and incorporating into that, or have you guys were thinking along those lines?
Any applications that can be built on it, like obviously with Monero's Tari, like we've thought of things like that. And to be honest, I read through the thread a little bit on Monero on this podcast, and someone had asked whether we considered, oh yeah, I got you, all the assets to be built on top of that. No, we're not in this report. We're not even factoring in any of that, any of the non-fungible assets that can be built on that. This is mostly assuming Monero's, currently as it is, not including Tari on there. So, but with these platforms, yeah, their ability to host and create applications on them.
So we're saying 18K plus.
Could be, but we didn't build that into this. We'll probably iterate on that in the future. So yeah. We
should say this is I don't think we gave the disclaimer. This is not financial advice, and whatever else is included in that disclaimer. This is merely a research paper. And me being a Monero fanatic, you definitely shouldn't take advice from me, because I'm just going to tell you Monero is the one.
Same with us. So no, I was kidding. Yeah.
But Tari is certainly, obviously it's a little hard to consider Tari at this point, considering it doesn't even exist. But I'm sure you've kind of heard, Fluffy's words on it, what I think is interesting is that he's kind of, because it's obviously not a new idea, right? Launching crypto assets on top of an existing blockchain. It was one of the first things that was done on Bitcoin, right? With, I guess, colored coins and what was the other one called? But so it's not a new idea, but I think it's maybe something that where if it gets rebuilt now and it's rebuilt with some of these use cases in mind, such as ICOs, that maybe it could be better built for those purposes, as opposed to something like an Ethereum that was just kind of built to be a global computing system without really knowing how that computing system was going to be used, not realizing that somebody was going to launch CryptoKitties and crash the whole network. So now that we kind of know, like, those are potential use cases and launching crypto assets and ICOs, I do find that to maybe be a promising thing about Tari, is that they're actually, now that we actually know the potential use cases for these platforms, that can kind of be considered when building the second layer. Just something I've been thinking about. What do you guys think about that?
Yeah, absolutely. That'll leak out a lot into the NFTs, and up here with what we put with the collectible arts and collectibles, which is a huge market. If any of that leaks into this, that's some pretty good value. Again, we don't have that listed out, but I mean, that's a pretty big opportunity. Yeah.
Yeah, can you guys go over that a little bit? The arts and collectibles aspect. So that's a market that's already being tapped into.
Yeah, so we've assumed a tiny share of that within Ethereum, mostly CryptoKitties and things like that, but it's not meaningful in any way. But yeah, we've assumed a very small amount of that there. And I want to say that's a $1 trillion market currently. We have that going, arts and collectibles going to be 1.3 trillion in 10 years, which is probably a pretty conservative estimate, but with our crypto penetration, it's like 0.5% or something even lower than that right now in our report. So we're assuming very little share within that space, especially from NFTs and things like that. So it's not reflecting much of that.
Just at a high level, with the NFTs and collectibles and things like that, just talking to people in the industry, that's something that people are extremely excited about. I think the Dodgers are actually going to be doing the first giveaway of a crypto bobblehead. I think it's built on Ethereum. I think that's happening tomorrow. And there's a lot of potential for that to grow, but that's contingent on some of the big game developers integrating those into their games and really giving people the opportunity to collect things that they could use and stuff like that, and trade. And they'll theoretically, if the game is popular, the assets, the collectibles will store some value. And I think it's an extremely interesting use case. So,
and when you think of the crowd that it's appealing to, it's not old people using this stuff that will complain about having something that's not tangible. It's this is the newer generation. They're not going to care about having something they can hold. They're going to think about something digital. That's all they're used to. So to Michael's point, it's good that they're starting out with things like that. It'll be interesting to see how it grows, and within games, within gaming as well. That'd be pretty interesting.
Do you think there's about the fact that Monero, the protocol layer is private and fungible? Do you think that makes assets built on top of it kind of unique, as opposed to building the assets on top of a Bitcoin or an Ethereum? Do you guys see any potential value there?
I actually don't have a strong, Mike, do you have a strong opinion on that? I haven't really thought about that much. That's pretty interesting.
Not me, no. It's not something I've put a lot of thought into.
I mean, you could think of it if the base chain is just stronger in that way and has more support, whether it be development, whether it be, I don't know, just accepted liquidity or anything like that. I assume different people want to build on it, maybe more. And the strength of the base chain as well, that would contribute to how stable those would be. But I really don't have a strong, what do you think? I don't think I've looked into it as much.
I haven't really. I mean, I've heard Fluffy allude to it as being something that might have added value, in that you can kind of turn the privacy on and off. Like it's default private, and there may be some value in wanting to maintain that. But yeah, no, I don't. I myself don't have a good answer for that. That's why I was asking you guys. But and I'm learning. I think we're all learning as we go with the Tari thing, right? It started what seemed like kind of vague to me, and now it's becoming more and more clear as to what it's going to be. So I think we're all kind of trying to figure that out as we go. How about things like, and maybe I'm just not realizing what aspect this would be tied into, but something simple as, if the new financial world is kind of running on these blockchains, companies aren't going to want to make transactions on a transparent one, right? Necessarily, right? They don't want their competitors to see how they're moving money around. If Tesla's making a big purchase of lithium or something somewhere, they don't want necessarily all their competitors to see that moving over the blockchain. So do you guys see that playing into this at all? Like where the business world itself is going to want to run on a private blockchain versus a transparent one?
Mike and I have looked into this quite a bit. On our first piece we wrote, I'm more on the technical side on private chains. It's like private chains are kind of like when you had the intranet before the internet. They're kind of experimenting with this stuff. I don't see them using this in 10 or 15 years. I think what they're doing is testing this stuff out, integrating it into their systems because they move incredibly slowly with these different IT departments. So I think they're testing it out, working it in as a transitionary step. And then when any of these public chains is large enough, I think they could definitely step in there and use something as like a kind of like a view key, like an opt-in type privacy, but in a way where it's not the entire network that's using that. The entire network could be public, but stable enough and large enough, but they could also, use some sort of privacy features that could be like an opt-in type thing. But I don't really think very highly of private chains at the moment with how they're made out to be. It's one or the other. I think they're a transition step while these chains are developing and maturing. Then they'll probably switch over. But
what do you think, Mike?
I tend to agree with that. There's a lot of hype and a lot of people trying to do like a private chain, without a crypto asset, and there's a lot of it's like if you're having a blockchain that's not secured by a crypto asset that incentivizes people to secure the network, it's almost like well, what's the point,
Yeah,
that's ultimately my opinion, I'd say.
Okay, yeah, I think I confused the question a little bit. I'm talking about like the privacy chain, so Monero itself, right?
Oh,
so like,
I thought
yeah, so like,
chains.
but
Okay.
I didn't want to stop you because you guys are making good points, nevertheless. But yeah, obviously, permissionless versus permission chains or private chain, but I'm talking about privacy chains. Are those? Is that valued in when you say Monero is going to kind of be potentially winning this privacy space,
Sure.
and the privacy space has potentially the largest growth potential here? Are you also taking into account like it's this concept that companies are going to want to transact over a blockchain that's obfuscated versus a transparent ledger?
Oh, absolutely. Yeah. Not much more to say beyond that, but yeah, absolutely. They're going to want that kind of feature. Yeah. Oh, sorry. I thought you meant.
And then, so how is that tied in? That's just in this general privacy breakdown over here.
Yeah, exactly. And then, yeah, exactly. It's tied into here. That is factored into this.
Okay. Because that kind of like goes back up to currency, right? Because like if like I said, if Tesla's like, purchasing some component from China and they're, using, eventually maybe everything's crypto. Are they sending Bitcoin to make that purchase, or are they sending Monero?
Right. Yeah, absolutely. And that goes into other things we factored in, which is, ransom money. You can definitely see companies storing some of this just out of fear. One of our friends the other day, I think it was his uncle, that had his landscaping business. His servers were locked, and just texted him, "Hey, I don't know what I'm doing, but I need my stuff. How do I just buy this Bitcoin stuff so I can pay them off and get my stuff?"
Mm-hmm.
That's huge. In the use case you're talking about, ransoms and a lot of different things. in pretty obscure cases, I think we're going to see that used. I mean, when you think of any sort of market where you want something hidden, some sort of value hidden, whether it be legal, whether it not be, it's going to be huge.
Yeah, I think it's kind of underestimated as to how many people are going to want to transact privately. I think Bitcoin is great for governments, right? But not so much for private citizens and corporations that are competing against each other in a capitalistic world.
Sure. And when you think of that, I mean, the crux of this report is that what tiny value in these really applicable markets like offshore deposits and remittances and just anywhere where you're storing value are can be used from these privacy networks. That's huge. You're right, it's tough to tell, but we've made really conservative assumptions with what percentage these could get from that. And considering how compelling they are within each of those use cases. And then you also assume on top of that, how sticky are these markets, right? Because when you see some of these markets that are using anonymous coins, it's not like they're flopping back and forth between PIVX and Dash. You're seeing Monero across the board. And they stick with that, and they're probably going to stick with that. We'll see how Mimblewimble does when that comes out, but they're with tiny bits from these giant markets with very slow velocity and very low turnover. You need a lot of this stuff to actually apply to those in the the amounts that we think that they could get of the share of the whole market. So yeah, it's tough to estimate, but we've done a pretty conservative estimate here. And by those estimates, I mean these numbers right here, when you get to the upside Monero, that's why these are surprising, I think, because I just don't think it's being reflected in this at all. That type of, and it's not sexy either. Like what we've seen the sexy stuff go up, right? You've seen a lot of these platform coins go up on speculation of some hot dApp. But when you think about it, the use cases these can already be used for. We're not talking about Monero where it has trouble scaling or whatever. These can be used for these applications already. You don't need scaling to store value. And so that's why I think these are really surprising. But when you look at the end market and even really conservatively what share they could get, and considering the quality of that share, it's really, really low velocity use case where you're just storing some value somewhere. It's very compelling. And I know what Fluffy says, and our job isn't to hedge away and say this stuff has flaws and whatever. No, our job is to look at this stuff and say what could be the most promising and communicate that to investors. And so, yeah, that's why privacy is like definitely, we think, the most undervalued.
So zooming out for a second,
Sure.
have you guys read Saifedean's book, or at least the title?
No,
it kind of sums it all up. the Bitcoin Standard. Have you guys heard about it?
I've heard about it. I haven't read it.
Okay.
Mike, have you read that?
Yeah, no, I've heard about it. Have not read it myself.
So that's being, that's kind of like the Bitcoin maximalist Bible of the day right now, and it's kind of the go-to in explaining why Bitcoin is the one coin that will rule them all. So I guess obviously you guys don't necessarily believe that there's going to be one coin, right? Otherwise we wouldn't be seeing all these different sectors and different coins owning different parts of different sectors. How do you guys kind of justify that, as opposed to the argument that it's like it would be one protocol that rules them all?
So I think there's going to be different needs that one protocol can't realistically do the best job at meeting every single need. And just at a high level, you look at something just like with privacy coins. I think privacy coins are great, but every single market, a privacy coin is not going to be the best option. There's going to be some places where some types of companies, because of regulation or things of that nature, they are they're either prohibited or it's very difficult for them to use a a privacy coin. I think there's many that will, but I think in certain circumstances, that's not always going to be the best option for every single company. So
yeah, it's a double-edged sword too. A lot of times, yeah, exactly with what Michael's saying. Like, it might be great because you have this, this Armageddon scenario where, yeah, you have incredible privacy, but then also that'll bar you from being accepted in a lot of places, and a lot of banks from dealing with, allowing these inlets for fiat currency to come in and actually purchase that. It's like a double-edged sword, but a lot of different trade-offs. That's why you see Zcash get listed so easily on Gemini and things like that, because it's has opt-in privacy. None of the network uses shielded transactions. But that's the great part. You can get listed on there because of that. I mean, it's a trade-off between these. So I can definitely see many, having value and share. Yeah.
So does Monero eventually win the store of value space?
So within what we've put, we have it having a share. I don't think anything will eventually have 100% of it in the next 10 years. I think it will increase quite a bit from where it is now, but not entirely. No, I think all these that have different use cases will have different flavors of some store of value. But I think this stuff to the markets that we've, incorporated into the model, yeah, it will have it'll have improving share within those, but not entirely. No, I think entirely will be years down the line if there's that. But store value, I think, will still be spread between several. Because if you think about it, a platform that will be used, and you use that token, or whatever, that have some resemblance of a store of value in that, in and of itself. But yeah,
that makes sense. And then so there's the overall, Bitcoin is gold. Have you guys thought about that? Is Bitcoin digital gold? Is Monero potentially digital gold? Or are you guys not really thinking of it in those terms because of the fact that you don't think it's one winner takes all?
Yeah, not one winner takes all, and that goes right into the store of value use case, right? Because when you think of gold, you think of that. You're not, it's store of value with that. And I think it's a pretty easy one-liner to communicate to old people that don't know what Bitcoin is. You go, oh, digital gold, and they go, okay, like I got it. But when you go into depth, you break that down by the market, by the application, and things like that. And I think that falls in the store of value.
Oh, we lose you.
We might have lost Sherwin.
He froze.
Oh.
Oh, here he is.
Oh, you're back.
Oh, my back. Oh, okay, sorry. Yeah, okay. Cool. I don't know what happened to it. Okay, but yeah, Mike, I don't know if you want to add anything to that, but
no, I agree. The whole the digital gold. I agree with what Sherwin said. It's a nice one-liner, but it really it's too topical. You can't just call something digital gold and then it's digital gold. You have to really dig a little more deeply into the use cases and really try and understand it. And I don't think there's going to be one winner takes all. I think there's going to be big use cases for a variety, for a few winners.
So this report, I mean, is essentially, obviously, it's talking about the valuations and looking at the potential sectors and opportunities and how big these spaces can be. And I think you guys have another report it's like a 5-part series, right? So there's another one coming down the pipe. Is that where we're going to start to see things like where we look at the risks that are involved with these things and things like regulation, rather than just looking at the valuations in an ideal world, balancing that against the risks? Is that what the next report is about?
Sure. So basically what we did is to initiate coverage on the crypto universe. We basically structured it as kind of like what we call the pyramid of learning within the space. So it's kind of like, let me show you. This is our first report. We went through, it's basically the technical parts, so consensus algos, hashing algos, but we basically came up with this pyramid, which is kind of the structure of what we have the 5 reports as. So the technical parts first, which are the most important. Network creation. So how do you make these networks? Where do they come from? What's the ICO landscape look like? And we did put in some, we put a pretty big legal section in here, which is explaining, the different jurisdictions across the world. How do they see crypto in general? Because maybe some haven't given ICO specific commentary, but they've given crypto commentary. And then market composition, so network stats, understanding all the different data that goes into these networks, because it's pretty unique. And then the valuation, which is what you saw now. And we actually just released the custody and trading. So last step is how to get your hands on it. What's the space look like for trading and getting it? We actually came out with that already. In terms of what you're asking, which is so with what you're asking, which is I guess legal. You're saying like the legal opinion on each sector?
Well, I guess what I'm saying is here, like in this report that I'm looking at, we could see, in best case scenario, Monero would own some percentage of this privacy market and this privacy sector, and this privacy sector would be valued at X dollars. And if Monero owns that percentage of the market, it'll be worth that amount essentially, right?
Right.
But are you then kind of weighing that against, the risks that are involved in getting there?
Sure.
Like the regulation. Go ahead.
Right. That stuff is pretty tough to estimate, and you can assign some sort of probability for something being completely axed off, or whatever, some country deeming whatever Monero illegal. You can have those scenarios. For what we published here, that did not assume any of that, because you can, and it didn't assume any sort of like what you think, like, I don't know if you say counterparty risk. It's not really, I guess it would be kind of counterparty, but development risk. If there's some sort of glitch in the Monero code or something that causes it to implode or whatever, we didn't factor for any of these. But that's an interesting thought to come up with, and we can definitely think of that in the future to come up with. Because you're right, what happens if you're saying some country bans a critical, tech element of one of these? What would happen? We haven't come up with that, but and it wasn't factored into this one, but we definitely could incorporate that. That's interesting.
Cool. And then I guess like other factors too, like the analyzing, or I guess maybe you did that in the earlier reports, the coins or the blockchains in terms of maybe how strong their development is, how active their development community is, how distributed they are versus other coins in terms of development, and also in terms of things like the mining network. And
we have some centralization stats here, which are really nice to look at. As you can see in the red, we have our favorite Ripple and our other favorite, which is Stellar, which are not incentivized to run a node. You have high concentration in the voting and mining power, and the actual supply of the money. Doesn't matter if Ripple's money's locked up, it's still theirs. The number of public nodes, and we kind of thought about that stuff and looked to their point too. Ripple was really nice with us, and they basically called us and said, we want to help you understand how decentralized Ripple can be, because we're making efforts to make it much more decentralized than Bitcoin and others. I said, oh, that's great. Why should I run a node? And they said, well, if you're already participating in the network, it would just be great to. And I said, great. Can I get mining fees or anything? No. Oh, okay. So that's great, but why would I want to run one? So at the end of the day, you're going to end up with, okay, maybe more nodes from a network that is already centralized in their purpose, which is using this network, banks, whatever. So we looked at those types of things. I still don't see that. Maybe it's more decentralized in the number of nodes, but the purpose behind it, if you're not incentivized to run this, there's a few group of miners that run Bitcoin. There's a handful of miners that run Monero, but they have some incentive to actually work towards it. With these networks, they don't have any incentive. Plus, to actually get a public node up and running, from what I've heard, is pretty tough within networks like Ripple. So we're kind of still waiting to see why would you want to contribute to these networks? No wonder no one's running these nodes. And most of them are vetted by them, recommended by them when you join their network. It's pretty centralized, so we came up with some stats around that. I can flash it up again if you want, but yeah, that's kind of interesting.
Yeah, I don't know what I was more excited about, the 18K Monero or the 1 cent Ripple.
Yeah, I mean, look, today with where the price of Ripple is, that's fine with what we're looking at. And another question I saw in the thread was, do we believe in fundamental analysis or technical analysis? So fundamental being what something actually is intrinsically. By the way, intrinsic doesn't mean tangible. Intrinsic covers intangible and tangible, which I think these networks have intrinsic value. And technicals, which is chart and price based. This model is meant to show you fundamentally the actual climate of the market and what comes on, whether it be an announcement from Ripple trying to pump up their crypto because they know that's the best way they've made money is through through their crypto rising. It's not even a crypto; it's a pseudo crypto. It's not even a cryptocurrency, but that's and a pump on an announcement. That's okay. We're looking at the fundamental value, that how compelling it is within its actual whatever market it's applying to. And when you look at Ripple, it's looking at a huge, to their point, giant market, but you can use other coins. So if you're going to come down to transaction throughput speed, you can use other coins that are going to be just as fast, other cryptos on their network. So, and even if banks all want to use Ripple, look at the high velocity it's being used for. As soon as you buy it, just by nature of it, you get the other once it's through, you're going to have to sell it. So the dynamic of it is it's a poor dynamic. So I don't see it capturing value. I don't see it you needing much of it to be able to facilitate that. So I don't know. It's and based on their supply, which they put out there to up their market cap numbers, it's it's misleading. There's not really. We'll see how their network goes, but and Mike, I don't know if you want to add to the
I'd say
bank announcement.
Just with Ripple in general, the stuff, there's so much. It's just a constant stream of hype, and most of the people that we speak with in the industry and stuff like that, are extremely skeptical of it. I would say in general. So it's going to be it's one thing to get more people interested and kind of knowing there's some use cases for crypto and for remittances and stuff like that, but whether Ripple is the best one or has the fundamental XRP that has the fundamental value, not so sure on that.
And you can tell a lot about the community too, adding on to what Mike said. When we published this report, if you just looked at the difference in the Monero community and how they responded to our report, which was good for Monero. We moved the price quite a bit. We didn't expect that, but it was skepticism. It was a neutral skepticism, not a blind embracing. Yeah, but when you look at the Ripple community, it was a blind bashing of this, with really not. When we go to the threads and you look at the entire XRP army, which Mike is pretty familiar with, and I am. There's not really a fundamental. Even when I spoke with their people on the phone, they couldn't give me really good reasons behind, a good counter to our arguments behind this. So just looking at the communities, you can tell there's a huge difference. Also, contrary to popular belief, Monero did not pay us for this report. We've seen that a lot. Mike and I were not paid to write this report at all. So, yeah. And short sellers did not write us did not pay us to write about Ripple. So.
Yeah, I mean, I guess what do you think it is about Monero that kind of attracts this skepticism? And
it's a smarter community. It's a way smarter, much more technical community. That's what we liked about it from the start. It's just more humble. It's a more educated crowd. They're not blindly following a cheap per unit price based on an announcement that is separate and unrelated to this thing. They care about the actual intrinsic development of it. Definitely.
No, thank you. So do you guys think the fundamentals will win at the end of the day? Because I mean, there are all these pumps that we're going up against. I mean, you have, Bcash on CNBC. I mean, you have like all these temporary pump, but will is it possible that kind of Monero gets left behind because it doesn't have the marketing power? It doesn't have somebody out there kind of rallying for it, or do you think the fundamentals will eventually help Monero rise to the top?
For the same reason Bitcoin pumped up for fundamental reasons, whether it went up too high beyond that or not enough, it's up here for a reason. However many 9 years later, it's up here for a reason. Same with Monero. In the short term, that stuff will impact it, but fundamentals long term will completely carry it. So, Mike, I didn't mean to.
Yeah, I think ultimately the market will be rational, and ultimately, fundamentals are going to drive the price. For the entire market, it's going to take some time, and like Sherwin said, there's going to be some ups and downs, and there's going to be some pumps and dumps in between that. But ultimately, the fundamentals will drive the market.
And most of the market right now is speculation. So if you look at the quality of what's pushing stuff, it's okay. Like, give it a few years. It's not going to be adjusting to these prices immediately. We didn't write this to actually predict prices and say in 1 year this will be worth whatever. According to a completely fundamental situation, okay. But the market will, it's irrational for some time. This is a new market filled with a lot of retail money, very different market than the traditional equity and debt markets and currency markets and things like that. But it'll take some time, but we think fundamentals will definitely win in a much longer term. So.
Are you guys, what are you guys excited about in Monero in general? I mean, we got bulletproofs coming up. We got Tari. We got Kovri. Are you guys, is anything in particular getting you excited?
I've been waiting for bulletproofs because, reduction in transaction fees and things like that will be pretty appealing. I can't tell you how many people I know that want to remove their Monero off the exchanges, but it's just expensive too. It's a smaller amount or something like that. I think that'll be a huge improvement. So I'm looking forward to that. So.
And what do you guys think about kind of the anti-ASIC approach we're taking and, changing our proof of work algo to kind of, beat out the ASICs?
Mike, give it.
Yeah.
I
think ultimately, in my opinion, this is my opinion only, ASIC development is going to continue to a degree where it becomes very, much cheaper to develop. There's going to be, more technology. There's going to be more, brain power behind the ASIC development, and it's going to be very difficult, I think, to continue working to always, avoid ASIC miners. And so long as there's the right incentives, I don't think ASIC miners are necessarily completely detrimental to an ecosystem.
Do you think it's kind of a good short-term solution that we're taking this approach to try to stay more distributed, or
sure,
it's
sure.
like, or it's futile?
Yeah. In the short term, I think it's a reasonable approach. I think eventually the goal is that the network is so big where you don't really have to worry about one person gaining so much control over it, because the network's so big. There's going to be multiple new ASICs, in various stages of development, basically all the time. That's kind of my thoughts on it. But it makes sense now. I understand the the reasoning and the approach behind it.
Cool. You guys have anything else you want to talk about in terms of the valuation?
No, I think we kind of went through everything.
Yeah.
If there's any more questions, I don't know if anyone's sent any more questions, but I think that was basically the crux of it. Yeah. Mike, I don't know if you want to add anything, but good.
Yeah, I think we covered most of it, unless there's any questions or.
Thanks, guys. I think that was great. Are you guys ever lurking around the Monero community?
You mean like on Reddit and things like that?
Yeah.
Or yeah.
Oh yeah, that's I'd say I'm not much of a commenter, but I'm always reading what's going on. So
most of our stuff has been forwarded to XMR Trader, our report, so we don't see it in r/Monero, but yeah.
Are you guys New York based?
No, I'm in San Diego, California, and then
Okay.
Mike's.
I'm in Santa Barbara County area, so our team is kind of decentralized, so to say. We have people in New York, a few people in Colorado, and a few people in California. So
cool. Yeah, because we're having a Monero meetup in New York next week.
Oh, well, you're in New York. Okay, cool.
If you guys want to swing by.
Yeah, let me get my private jet. Oh, wait.
All right. Well, that was great.
Cool.
Thanks for coming on. Should we expect more Monero reports coming out from you guys, or what's next? I know you had the 5th part of your series, I guess, came out. What's kind of next for you guys?
Yeah, so continuing on that, basically looking at each of the sectors and writing up research on that. So yeah, you can definitely expect that. Yeah.
Great. Yeah, no, it was really exciting to see this report. I think, like we were saying in the chat, the Monero community, for all these good reasons we were just talking about, is kind of opposed to talking about things like price and even what the future price might be. But I certainly think it's an important thing to talk about because it's obviously an indication of whether or not Monero is working and achieving its goals of being a currency and a store of value. So I don't think it's the worst thing in the world to talk about the price, and it's certainly an exciting estimate to see 18K in 5 years. And then all those other things we were talking about where we weren't even kind of factoring in Tari, or the fact that Monero might have some elements to it that are better than Bitcoin for currency purposes. I'm just excited to see these numbers. So thanks for doing that. I know you guys we're just taking an objective approach, but it's certainly exciting to see, being a Monero enthusiast.
Cool. Thanks for having us on.
Yeah, thanks for having us on.
And to everybody watching, I mean, obviously read the report if you haven't already, and check out their because I was getting into some of your early reports. There's a lot of great information in there. You guys really broke things down and simplified a lot of things. Even getting into the different types of proof of work coins versus some of these other approaches that are being taken, these non-blockchain approaches, which, I've heard in different areas, but you guys really break it down nicely. I think that was that the first report?
It was the first report, right? We went through basically the different architectures. So something like Ripple, which revolves on a hash tree. It's not a blockchain, which people don't know. Then you have blockchains, you have DAGs. Hashgraph's a DAG. IOTA uses a DAG. So we go through the architectures and then the different consensus algorithms and hashing algorithms and stuff. So that's a technical one, yeah.
Yeah, in general, I'd say that technical report is kind of essential reading for anyone in the space, because you guys really break it down nicely and make it easily digestible. And that's it, man. Thanks for coming on, guys.
Thanks. Thank you.
Absolutely. Thank you.
All right. Have a good one.
See ya.
Bye.
So long.